Well, thanks so much for tuning into this earnings conversation, which is also the talking point for the day today. Tata Power, the numbers came out, and if you look at the numbers optically, they seem to be largely in line with estimates. People could quibble about compared to the previous strong showings, is the profitability or the EBITDA margin performance or the operational metrics slightly under pressure? Well, I'll pose those questions to the Praveer Sinha, but frankly, this conversation is a lot more about what will happen in 2021 after what's largely been in many ways than one, a transformative year for the company. Let's get him in on the show to talk about first the quarter gone by and some nuances there, and then we talk about the near term. Mr. Sinha, good having you. Thanks so much for joining in. Hope all is safe.
Thank you, Neeraj. Always a pleasure to speak to you. And yeah, this has been transformative year, and thank you for all your support.
No, not at all. Mr. Sinha, we'll talk about what went by and what transpired as well, but can we just focus for a moment on how the quarter went by? For you, compared to what you've done in the July to September quarter, or in the quarter before, which was also marked by lockdowns, did you anticipate to do a little bit more? And did you feel that if a few other things would have gone right, the showing could have been much better in the quarter three? And actually, can those things happen in quarter four?
Thank you. I think the quarter has been a very steady performance, but so has been the last 5 quarters, where each quarter we have done better than the previous quarters. And this quarter also, the PAT is 22% more compared to last year. And we need to understand that this year is a COVID year. It is not the normal year. And we have been under pressure in some of our businesses, especially some of the earnings that we get from Tata Projects or the EPC business for the solar that we do. Many of them have been little stressed, and so also some of the new businesses in rooftop. And so if you see our performance this quarter has been very good, very steady. Under such challenging conditions, all our plants have operated at full capacity. We have been fortunate to get enough supply of coal, whether domestic or imported, and all our transmission and distribution businesses have done well. In fact, there was a time in the month of March and April when the consumption went down, the collection went down. We are virtually back to normal. In December, we collected 100% from our consumers in Delhi and Mumbai. So I think generally this has been a very good quarter, and that really shows huge resilience within the company in terms of its people able to work under very challenging conditions. And also, I think very steady and consistent performance of all our businesses. And we expect that this will continue. This has become a hallmark of the way the company performs now. And going forward, it will only improve in terms of many of the businesses that we took over. The benefit of that will start coming in the next few quarters. Like the Odisha distribution, we are seeing that our performance has improved. Reliability has improved, and so on. Also, the AT&C loss has come, and hopefully in next few quarters you will see the full benefit of the improvements that has been carried out. The other 2 distribution companies, we will start seeing the results in next few weeks, few quarters. So I think we will see much more actions going forward, especially now that the COVID impact has reduced drastically, and also some of the steps that we took, whether it was relating to merger or to InvIT, we should be able to close them in next 2 months' time.
Yeah, I think a lot of people are waiting for those triggers. I'll talk about that in a moment. Just a couple of questions. One, the operational metrics. I would reckon that they could partly remain volatile. People shouldn't read too much into what has happened in quarter 3 as a steady state argument for the remaining quarters, I presume.
In terms of our operations, most of the operations have been very, very steady. Our Mundra operation,
please carry on.
Excuse me.
God bless you.
Our Mundra operations has been very steady. We were able to reduce the debt of Mundra by nearly 4,000 crores out of the receipt that we got from the sale of ships. We also got the money from the pref capital, so that was used to reduce our debt. We also saw that the coal prices were very soft during that quarter, and we could take the benefit of low coal prices, as well as we could take the benefit of blending of coal. And because of many spot purchases and distress sale coal that we could collect in the last quarter, the results have been very good. We now expect that the coal prices will go up, and we have seen in last 1 month the coal prices going up. That will, of course, help us in better revenue and better profit in our coal companies, but it will have a little stress on Mundra. But because of better sourcing of coal that we have been doing, it would not be so bad. Similarly, we find that all our other generating plants have been running at full capacity. They are doing very good availability. Of course, the demand of power in the first 2 quarters had been very low, and on an overall basis, that shows a lower revenue. But in terms of the returns, it does not impact us because we are a regulated business and we get the full return for the availability of the plant and not on the PLF. Secondly, the benefits of the distribution businesses which we took over, especially the central Odisha, we are seeing now the improvements have started showing results, and next few quarters we'll start seeing the full impact or the benefit of the reduction in AT&C losses and the incentive that we will get over there. The other two discoms which we took over on 1st of January, next few quarters we'll see results from there. We are expecting large amount of EPC work to happen in this quarter. There were delays because of first COVID, and then importing from China many of these raw material and many of these equipments got delayed. We expect that in this quarter we'll receive all the equipment. So I think all in all, we are expecting sustained improved performance going forward.
Yeah, I mean, the integrated CGPL coal business, I think, swung into profits as well, which I think a lot of people have highlighted as a standout point. I was just wondering, because the operating margins just came off a little bit on a YOY basis, whether people shouldn't read too much into it or no. That is part one of my question. Part two of my question is, what about the renewable business? Because somehow in the minds of everybody now, when they look at power businesses and the valuations that get ascribed to one business, and then you take into account the kind of the profile and the product profile and the power plant profiles that maybe you have, how do you see that growing, and how do you see that getting valued, Mr. Sinha?
See, the good thing that has happened in Mundra and the combination of cluster of Mundra and coal companies is that if the coal prices goes up, the upside that we get on coal is much higher than the downside because of the blending of coal that we are able to do and the sourcing that we have been able to do. Secondly, the interest cost will come down drastically. So the impact of it, because most of the money came in the third quarter, so the full impact of it we will see in terms of the interest cost saving in Mundra in this quarter and subsequent quarters. So I think it's a change which will be sustained in the future also, and it is not a one-off benefit. In terms of under recovery, last year, same quarter, we were at 40 paisa. This year, we have come down to 32 paisa. So it's again showing a very good trend in terms of our ability to, and mind you, this is without the interest cost saving. So once those impacts are also considered, the under recovery will further reduce. So I think consistency of performance is something which we are seeing in Tata Power, and many of the new businesses that we are now getting into has also will start showing results. The EPC business, we have an order book of nearly 10,000 crores. The rooftop business, which we again was little subdued in the initial 2 quarters, we find that that is improving now, and it is expected to grow 10 times in 5 years. The solar pump business again is expected to grow 10 times. In fact, last quarter we had the maximum sale of solar pumps ever, so 2,700. So these are huge numbers. Just to give you an idea, in this quarter, in spite of subdued EPC for solar, we did something like 945 crores. 2 years back, our total annual revenue from Tata Power Solar EPC used to be 1,000 crores. So we are not talking of what we do in one quarter, what was the annual. So you can imagine the type of growth that we are seeing. It will add to our both top line and bottom line. Once we are through with this COVID, and which I think we are more or less through with that, you will see the real benefits coming out in the next financial year.
Would you reckon that the way the market values your renewable energy business too could change with all of these, and with size and with some of the uh, other pieces moving back, right? I mean, everybody's waiting for 16th Feb for the shareholders meeting to figure out what's the decision thereof on the merger, then the deal on the InvIT. Once all of that out of this way, would you believe that the market will be able to give a better focused valuation to the renewable energy business with some sighting of what the projects will be 5 years out?
I agree with you that many of these businesses were earlier very small business. Uh, Rooftop, we were doing something like 50 crores. This year, we will be doing something like 800 crores. And we are talking of 10 times this. So these are numbers which was not there earlier. They were very small businesses. Similarly, solar pumps was a very, very small business. EPC itself was a very small business, and we are expecting much higher turnover and revenue from these businesses. We have 10,000 crores of order book which will get implemented in next 18 months time. So you can imagine we'll have a revenue of nearly 8 to 10,000 crores in a year's time. So you can imagine the type of capability that Tata Power has. Unfortunately, many of these were very, very suboptimal earlier. And once these start growing up and they have scale, then the market, I'm sure, will be able to give proper valuation to all these businesses rather than just giving it on a generic basis on Tata Power.
Okay. One more question, and you've kind of partly answered that already, but I would still ask you, Mr. Sinha. You've always maintained and reiterated that by the end of this current financial year, the decision on the InvIT will be out and known. I'm just trying to figure out that, be that as it may, what are the timelines? If there are any timelines that you could share about when does it get consummated, etc., etc., or would you leave it for the day when you actually make the announcement?
Let me share with you that in last 8 months, there has been huge amount of discussion with many of the investors who are looking at this opportunity. And it requires a visit to the site. We were in COVID period. The due diligence requires huge amount of documentation. I'm told that there was something like 30,000 documents that that people went through the due diligence process, and then there are 15 agreements that we need to enter to consummate this. So going through each of these agreements and understanding and the issues, the impact of it. So I would say that we are in the last phase of it. I'm expecting that within this month we will have the firm offer, the binding offer, and also an agreement on these 15 agreements. So once we do that, then the process of getting the necessary approvals from the statutory authorities will be done. And we are definitely targeting that within this quarter or maybe spill over a little bit, we should be able to close this.
Mr. Sinha, one final question, and we can talk about the near term, small numbers, etc. But whenever I look at strategy reports on Tata Power, most people, amongst other things, aside of the near term triggers, talk about how they would want to understand from you what is to your mind the kind of growth that could come into the renewable business, maybe 3, 4, 5 years out, if you will, because that ups the fair value for Tata Power in a meaningful way, considering the kind of valuations that some of the other uh, similar size players are getting, whether in India or abroad. Any sense? We are in 2021, or start of 2021. How do you see this, say, 2025?
Let me tell you that in renewable right now we are 2.6 operating plants and another 1.4 which is under implementation, which in next 12 months will get completed. So we'll be 4 gigawatt. We have plans to become 5 times of this in 5 years. So we are talking of something like 20 gigawatt. I mentioned to you that this excludes the rooftop solar, which we will become 10 times in 5 years. This excludes the solar pumps, which we will become 10 times in 5 years. So we are talking of huge numbers. We are also talking of huge numbers in distribution. When we started the year, we had 2.7 million consumers. In just 9 months, we are talking of 12 million consumers. So it is for you to see the type of growth that we have, and we have now with the announcement in the budget this time that the Parliament is going to consider the bill for delicensing of distribution business. I think the opportunity for us is humongous, and we will play a very, very active part in not only renewable but also in distribution.
Well, we wish you all the best for all of that, but I'm sure a conversation is around the corner in less than a month's time, or maybe 45 days time. So we'll talk about a lot of other factors then. This was just good to understand from you, Mr. Sinha, your view of how Tata Power could look like and some idea about the quarter. Thank you so much for that.
Thank you very much, Neeraj, for having me on the show.
The pleasure is ours, and viewers, thanks for tuning into this edition of this earnings conversation, which was also the talking point for the day.